the message of the markets is it's been all risk on. So everything that was a safety trade, bonds, gold, etc., that's been sold. Everything's into full-on risk right now in the markets, and that's probably going to stay the case here at least for another couple of weeks. But here's what you need to know before the bell this morning. Market yesterday had actually sold off kind of earlier in the day and then rallied back to just a little bit into positive territory, but basically just holding up here at a very high level. Participants right now just not willing to sell. That's really kind of where we are. They're not really buying as much. We're starting to see volume drop here a bit on kind of the VWAP basis, the volume weighted average price. And, so we're not seeing a lot of demand for stocks, but sellers just aren't willing to sell here either because they're expecting this market to continue to rise into year end. Analysts are getting very exuberant with their outlooks for year end. As I said yesterday, I put out a poll on Twitter. 50% of people are like, oh yeah, it should be 6,200 by the end of the year. Shouldn't be a problem. So we're starting to see a lot more exuberance in the market. Bitcoin, of course, is the interesting one. Since the election, Bitcoin has just absolutely kind of just melted higher here, currently trading around 91,000 this morning. So we just had a very, very sharp speculative run. And this is the beauty of Bitcoin, which is the best speculative investment, kind of measure of risk. If you want to take on pure risk, Bitcoin is that measure. And it's has just melted up here over the last few trading days, which is great, right? So I own Bitcoin, so it's been going up. It's great. But again, extremely overbought now. The MACD is very, very extended, so strong, really strong momentum here, but extremely overbought right here. But again, Bitcoin can remain overbought much longer than you think. Now, conversely, gold has just absolutely gotten hit hard here, really, since the election. Gold's trading down another 80 basis points this morning. Cracked the 20-day, cracked the 50-day, testing the 100-day. We're going to threaten to break that 100-day moving average today. If we do, that's going to set gold up for about 2,400 on a pullback. But we had talked about this before. As with Bitcoin is now, gold was extremely overbought. And we talked about this on the show a few times, like, hey, on a monthly chart, you've only been this overbought about 3 times historically, and you normally get a decent correction following such big monthly overbought conditions. Big sell signal here, momentum actually drying up fairly sharply here. Again, you're getting pretty oversold on gold, so I would expect a bounce probably back up to around 2650, where the 50-day moving average is on gold, and that's probably going to be a decent opportunity to take some profits, rebalance your risk in your portfolios, particularly if you've got a lot of weight in it. You've definitely kind of broken the previous trend right now. So again, just kind of keep a watch on that. Lastly, IWM, this is the Russell 2000. Post the election, there was a lot of exuberance about small cap, mid cap stocks, of course, coming out of election, deregulation, lower taxes, etc. Saw a very, very big pop in small cap stocks. Again, kind of like Bitcoin, extremely overbought, working off now some of that overbought condition. Expect small mid caps here to pull back to around 226, 227 probably. Test that 20-day moving average. That'll be a decent entry point to add a little bit of exposure potentially going into next year. If the expectation is that we're going to see the Fed continue to cut rates, that you're going to see better economic growth. Bank lending standards since the election have loosened up sharply. So banks are very confident right now with the Fed cutting rates, and now with the new administration that's very pro-business friendly. Those business lending conditions are starting to loosen up. That's going to be helpful for small to mid-cap companies. We should also see a very big explosion, as I said before, in the NFIB index, which will also be very supportive for small mid-cap stocks. So again, look for a pullback there to add to your position or to build a position. Again, overbought here short term, but this is really kind of the message of the markets is it's been all risk on. So everything that was a safety trade, bonds, gold, etc., that's been sold. Everything's into full-on risk right now in the markets, and that's probably going to stay the case here at least for another couple of weeks. So we'll just kind of continue to measure this, but understand markets are really overbought. You're going to have a pause here. So don't forget, rebalance your risk, manage your portfolio accordingly, and you'll be fine. but that's what you need to know before the bell this morning.